TD Bank, that is TSXTD, has long been a favorite for investors, thanks to its robust presence in both Canada and the United States. Its diversified operations and broad customer base have made it a top pick for those looking for stability and growth in the banking sector. However, the bank's recent performance has raised some questions about its future trajectory. Despite facing significant challenges, including regulatory issues and operational hurdles, TD still holds potential for a strong comeback in the next few years. The past few years have not been kind to TD. In 2023, the bank faced a major scandal when employees in its U.S. branches were involved in money laundering activities related to a drug trafficking ring. Although the individuals involved were lower-level staff, the scandal led to a deeper investigation, implicating upper management for failing to prevent the illegal activities. This culminated in a hefty $3 billion fine and a significant cap on the bank's assets. The impact on the stock price was substantial, with shares dropping below $74 at one point. However, those who bought in at this lower price saw a recovery as the stock moved closer to $80. Despite this volatile period, TD is still growing. In its most recent quarter, the bank reported a 10% increase in revenue, a sign that it continues to thrive in certain areas, even as its profitability has been impacted by the costs associated with the fines and regulatory measures. The U.S. retail business, which once drove much of TD's growth, is now restricted by an asset cap, preventing any significant expansion in that segment. However, the bank is looking for growth in other areas, such as investment banking and its stable Canadian retail business. One of the biggest selling points for TD Bank right now is its cheap valuation. At under 10 times its adjusted earnings, TD stock is cheaper than most of its peers. It also trades at low multiples to sales and book value, making it one of the most affordable, large North American banks. This pricing presents an opportunity for investors who are willing to look beyond the challenges of the past few years and bet on TD's long-term growth potential. Looking ahead, the question remains, how will TD's growth be impacted by the asset cap and other regulatory challenges? While the bank is still financially solid, its future growth might be slower than in the past. The U.S. retail segment, once a major driver, will not be a big contributor to growth moving forward. However, the bank has alternatives to sustain its development, including its investment banking division, and its ability to utilize capital freed up from its U.S. operations for dividends and stock buybacks. So, while TD faces some obstacles, its long-term outlook is positive. The bank's strong revenue growth, combined with its relatively cheap valuation, makes it an appealing investment for those who believe in its ability to adapt and navigate the current challenges. While it's impossible to predict exactly where TD's stock will be in 3 years, the potential for growth remains, especially for those willing to be patient and look beyond the hurdles of the past few years. For investors, this could be a prime opportunity to buy in at an affordable price and watch the bank recover and expand in new areas over time. Stay subscribed for more videos.